Hello everyone, this is Terry with Futures.io, and as always, I would like to thank you for joining us today. It's my pleasure to welcome back Jason Berry for today's webinar, How to Keep Your Trading Career, Questions and Answers. Throughout the webinar, if you have a question, please feel free to type them into the questions box, and we'll do our best to answer them. This webinar will be recorded and posted on Futures.io within 24 to 48 hours. If you're watching this on YouTube, please do us a favor and give us a thumbs up if you enjoyed the webinar. And as always, please feel free to share, comment, subscribe to our channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And now, without further delay, I'll hand it over to Jason, and you'll get the pop-up to share your screen again.
So I just say show my screen?
Yes.
Okay.
There you go, looking good. I'm also going to make you a organizer so you can see the questions as they come in as well. I forgot to do that.
Yeah, that'd be great.
Okay, you're good to go.
Just a little bit. See my okay.
All right, everything's set. You're good to go.
Great. Hi, everybody. Thanks for tuning in. I wanted to share with you guys some of my experience over the years. Wanted to share a few stories, but mostly I just wanted to there was a big Q&A the last time I was talking, and so I really wanted to entertain a lot of questions and answers on this session. But to kick things off, I'll give you a little bit of background about my trading experience and my trading career. Try and give you a couple funny stories from the floor, because that's where all the craziest stories happen. Not so many crazy stories on electronic trading floors, but definitely on the old open outcry floors. And then on top of that, the two opportunities that people have to get into this profession or continue the profession that I work with, Positive Equity Professional Trading Floor, and TradingDock, a simulation environment that simulates our trading floor and gets people who qualify through a similar training program to trade live on the Positive Equity trading floor. But my history is, well, first I'll get into my history, and then we'll rock through all those other pieces. Feel free to fire questions in. I'll try to keep tabs on the question bar and answer them as they come through, so don't be shy. So I started my trading career in 1999. Originally, I traded over the phone. I would call in orders between midnight and 10 a.m. from an office in Florida, and I would call the Chicago trading floors and ask them to put orders through. I was a one-lot trader, and nobody really wanted to receive my phone call, so it was fun pestering the guys on the other end. But again, the guy who was working was also working the midnight shift, so he was he wasn't somebody to be picky on whose customers were calling him. But I would get to work at around 1:30 and trade the European Open and the U.S. Open, and then I'd go home and crash in bed. But that was a 2 a.m. shift until about 10, sometimes a little earlier, sometimes a little later. After that, I moved to London, where I was a clerk on the trading floor at the London International Financial Futures and Options Exchange in Cannon Street, and there I was a clerk for 6 months for an open outcry trader who traded in the short-term interest rate pits, the Swissy, the German mark, and this was all before the euro came around, and then eventually the euro. From the floor, I went on to electronic trading. A couple of people wanted to go to Ireland and start an electronic trading business there, so I went there. and then I basically spent the next 13 years working at two different firms, and starting my own proprietary trading firm with a couple of partners and a bunch of traders in Dublin. And since Dublin, I've also been working. 6 years ago, moved to Croatia, where we've got a small trading floor behind me, and continue to operate the two offices in Dublin and in Croatia. So my experience is both running a firm and training people, but primarily from your guys' perspective and interest is actually trading in the financial futures markets for the past, geez, it's almost embarrassing to say 20 years. It goes by quickly. There's been big years, there's been small years. I would like to say there were no negative years, but I can't remember. I think 2004 might have been a rough year. Gangbuster years were unfortunately, or the mixed emotions of September 11th, the shock of watching the airplanes and buildings and the Pentagon and all the chaos that came from that, the emotionalness of that day, mixed with it being one of the busiest day I'd ever seen in my career and most successful to that point. It seems all the bad times are when proprietary traders tend to do the best. So the recession in 2008, 2009 was incredibly good. The bombing in London just that day, July 7th, 2007, was a crazy day. And most recently, probably the most insane open of my career, not from my own trading, but just from watching the markets, would have been the 2 days. First off, the day after the Brexit vote took place, and the day after Trump got elected, or at least those mornings were. Well, I'd say the Trump was about a third of the craziness and the volatility, and Brexit, the day after Brexit, was just insane. Markets moved more than I'd ever seen move before. But most of the crazy stories happened on the floor, and I said I'd share a few of those stories. None of them are very highbrow. The traders on the floor, if they weren't trading, most of them were from East London, and had more or less only high school degrees. Some would have college degrees, but quite a few would just come straight from high school, would clerk, and then would trade for a trader or work for a trader as a clerk, and then make their way up and hopefully find somebody that would back them. So a lot of the funny stuff that happened on the floor would always happen to the new person, and since I was there only 6 months, a lot of these stories actually happened to me. The classic one is old high school trick of when you were in the pit, somebody comes up and behind you and says, "Oh, hey, welcome to the pit," and you think they're patting you on the back, but actually they're sticking a "kick me" sign on my back, or some other sign that makes people throw stuff at you for the rest of the day, and you wonder why people throw stuff at you for the rest of the day. But the worst was somebody came up behind me early in the morning, and we all wore suits back then, and evidently unbeknownst to me, you only wear black or navy blue suits in the city in London, and I had this black and white horrible double-breasted thing that I'm embarrassed to say I had. But anyways, it was my first job out of college, and somebody taped a tampon and had written into it with red pen, and I carried that around my back for most of the day. That was really pleasant when I figured out that was taped to me. Thanks, guys. Great experience on the floor. I couldn't wait to leave the floor and go trade electronically. At the end of '99, 2000, most of the electronic trading floor, most of the old floor started to either slow down, or the volume started shifting from the floor to the electronic trading environments, and that was my cue to hightail it over to Dublin. Before I left to Dublin, I worked for a a company called Griffin Trading that was right in the city in London, and they were taking traders from the floor onto the screens and wrestling with that experience. A lot of people would come from the floors and be 50 lot or 100 lot traders, say in the Bund, and they would expect to be a 50 or 100 lot trader on the screens. And so this transition from old school trading to new school trading happens all throughout electronic trading environment as well, but this was probably the biggest shift in most traders' careers or generation / lifetime, that you go from open outcry to electronic trading environment. And that change was pretty much cleared out, I'd say about 90% of traders. And the people that survived moved on to the electronic trading floor. And that process continues every year, where the markets either get faster or more complicated or more difficult, and the people that were making money last year, the year before, 5 years ago, 10 years ago, struggle to maintain their advantage and abilities in the market, and wrestle with that process. So when I was on the floor and moving to the screens, I would see people who were 50 lot traders, 100 lot traders in the Bund, and they're like, I'm going to trade 50s and 100s on the screens. And trading on the screens there's no preference. You don't get any preferential treatment on the floor. If you have a good buddy who's a broker, the broker says, hey, here's a nice trade, here's a nice trade, and you take them out for a beer after work. But on the screens, you're anonymous, and these guys a lot of people really struggled. And so if you came in every day and you were trading 50s, you were blowing through cash, you didn't last very long. So I'd say my biggest and first lesson, and I'm using the floor to electronic trading platform as a very clear and stark example, is that when you're struggling in the market, you do not stay on the same size that you've been trading previously. And one of the secrets to not really a secret, but one of the lessons or takeaways from my career is that I've never been embarrassed to go back down to trading one lots. And most recently, in the last 10 years or so, you can trade on simulation. So there are markets that I still, when I start trading them or trade them again, or when I'm trading badly, I'll go on and I'll either trade one lots or I'll trade them on simulation. And there is nothing wrong with that. And people who struggle with swallowing their ego or swallowing their experience, whatever it is, and unable to be humble about making that transition or making that change or doing the right thing of reducing your size, makes it very difficult for them to stay in a career when they're losing money. So probably one of the biggest things that has kept me in this career for as long as I have been, embarrassingly 20 years, is being able to go down to one lots and trading small size, because it keeps you alive when you're trading badly. And then once you're trading well again and you picked up the edge, then you can pick up the size. Most recently in a market this year that I've been trading for 4 or 5 years and haven't had great edge in, I found some really good edge in. And over the last year, I'd say my max position was say 30 lots or 40 lots, and I found some edge in January, and I increased that up to 50s for a couple of weeks. The edge continued, increased it up to 70s, and now I've got 100 lots in Eclipse, and I'm double clicking in and getting 200 and 300 lot positions. And that goes from what I was trading in January of just 30 lots. So there's no excuse for going down to small size, because you can always ramp it up when you're trading well. And it's really important that you increase size when you've found an edge, because those edges don't stay around that edge does not stay around for a long time. It'll eventually get figured out by the market and it won't work as well. So second lesson, be able to increase size massively when you find an advantage in the market that you can count on. One of the other stories from the pit, and again, I'm using these stories from the pit to the screens because it's such a clear example of how to stay relevant, is about innovation and coming up with creative ideas to keep you in this job and in this career. And one of these is technology. Probably the biggest change and the biggest skill that's most advantageous for traders nowadays, or ability to work with that skill, is being able to program. Back on the floor, however, there was a trader who was super successful, and on the floor you could only see, you didn't have screens in front of you. Here, when you sit, my desk, I've got 6 screens, and I'm looking at markets all across the world. Back then, when you were on the floor, you would have only the markets that were on your floor, and then you would have the U.S. markets, but you'd have them up on tickers across the top of the exchange floor, and so people would watch the tickers. But there's a delay from when it happens in the pit in Chicago. So where I was, we were watching the U.S. 10-year and the S&P, and so there's a delay between when something happens in Chicago, somebody types it into the ticker technology, sends it across to London, and one of the traders, and this is the point about to stay relevant in this profession, you need to embrace technology and innovation and do new things that other people are not doing. This trader had, and it sounds super simple today, but back then he was a genius. He would place an international phone call at $1 a minute or $2 a minute, back then when phone calls were super expensive, and he had a little earpiece, and he would put it into his earpiece, and he would listen, and he had a friend who, and this is just when the mobile phones were starting to take off in the late 90s, and he had a friend who was in the pit in Chicago, and he would listen to the shouts and screams through the phone, not of his friend, but of the actual pit. The guy actually didn't say anything, or every once in a while he would say something, but he listened to the pit. So the third advantage, or the third thing you want to do to stay relevant in this career, is innovate new ways to do things, new ways to find edge. And you don't get obvious ones like that anymore, but there still are a few ways to innovate and find new things. One of the biggest is definitely programming, and the ability to be either a programmer or to work with programmers, because programs can execute 5, 10, 15, 20, as many different things in a second, whereas an individual trader can only click a few times every second. So being able to build automated and semi-automated programs, or use automated / semi-automated software to trade is an essential part of being a successful trader today. Any questions so far? Ooh, I do see some. I'm going to take a little break here. Let's see if I can get my thing to work. All right, I can see one, but I can't fully see the question. Might have a technical question here, Terry. Oh, here we go. I've got them expanded now. Got it. Good to go. Okay. Just read through the questions here. See if I can pick up some good ones. What languages do we use? C++ is the one that immediately jumps out. There are a couple other ones out there, C#. The main ones, really. A VBA is useful for manipulating Excel better. But C and C, C#, C++, and C#. We got questions are coming in too fast down here. No typing, guys. No typing. Hold on. All right. Can you please define what a trade you can count on is? From Andrew. What is the one thing you see that makes you think this is a winner? So the difference between trading and gambling is, well, maybe not the difference, but one of the things about trading is that from observation, and this is let's call this the fourth piece of advice of staying relevant over the long term, is staring at the screens and watching your market, and intimately watching your market. I don't mean just sitting at your desk and checking your phone and looking up and taking a look at the screens and seeing what's going on. Hold on a second. I need to shut down my own screens here because I keep looking over out of habit. Let me delete my orders and get rid of them. All right. So is staring at the screens. And this is a tough skill because it requires patience and dedication. But your ability to watch the screens and notice what's going on in the markets and see patterns and see how market order flow is moving, see how stuff is trading, is probably one of the #1 ways to discover edge and to become intimate and understand the markets. And it's very difficult. Our training program is let's say on the basic side, is a 2-year process of developing edge and advantage in the market. First 3 months is just training and going back to school, and then it's on simulation for 9 months to a year. And on that simulation, the trainee's job is to stare at the market at specific times of the day, or all day, or at times where they think is opportunity, and to religiously watch the market and learn and write down notes. So the question is how do you know when you find a trade that you can count on? You should, through observation, be able to discover order flow, trends, volume indicators, and I don't mean technical indicators. I mean you should be able to see volume trading. You know, you can tell when the S&P is going somewhere because they're trading through every bid to just bang, 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 bang. Whereas on, you know, slow days, it's kind of up and down, but when that thing picks up into 5th gear, you know that it's going somewhere and you can count on those trends. So without getting into specific edge, observation and looking at your market teaches you when there's a trade on that you can count, and then you can go after with size. Adam Novak, you've got a lot of questions about TradingDock. I love them. Probably the best answer I got to there for you is to contact the guys at TradingDock, and they can answer all those ones. I'm pretty sure there's a chat that you can message them. Are you saying that discretionary point and click traders will die out? Yeah, now that's a tough question. That is a tough question. Markets are always going to go up and down. And there are always going to be people who started 10 years ago and who are going to struggle to be relevant 2 years later or 4 years later or whatever it is. People who start today are going to work really hard, build up an edge. But then a lot of people, and this is probably one of the other reasons that I've been successful for so long, a lot of people struggle through the process of developing edge, work really hard, work harder than they've ever worked before, do the 2 years, 3 years, 4 years of developing edge, and then they stop. And they expect that past 1 year, 2 years, 3 years, 4 years to carry them on for the rest of their career. Whereas the people that are able to say, I'm no better than a trainee, no worse than a trainee, no better than a trainee, and I know that I need to be in trainee mindset all the time in terms of knowing that anything I develop today possibly will disappear tomorrow, in a week's time, in 10 weeks' time, in a year's time, in 2 years' time. I know for certain that stuff that works today will not work at some point in my career in the future. So I need to be consistently developing new strategies, new markets, and new technology that helps me stay relevant. And anybody that forgets that or doesn't do it on a regular basis is definitely going to be a point-and-click trader that just doesn't make it in the long term. Now, will point-and-click traders die out? No, the markets are always going to go up and down, but they are going to change, and they're going to change in a way that makes it ever more difficult. And the people that are able to adapt to that continue to be successful. Now that said, the point-and-click trading career has I don't want to say it's become more difficult, but the overall trend of the total number of traders that are in the profession is definitely down. I just bite my tongue there for a second. There are lots of traders that trade different ways than what was available years ago. There's algo traders now, there's programming traders, there's semi-automated, there's automated trading. There are more automated ways to trade nowadays and more creative ways to trade that point-and-click traders don't do. But that also means there's other opportunities for people to take advantage of algorithms that don't trade properly. Overall, though, the number of proprietary trading firms, and I think the number of proprietary traders is successful proprietary traders is down. I know that most of the people that I started trading with aren't trading anymore. I know most of the people that I trained, I won't say most, but a good percentage of the people I've trained over the last 2 decades have gone on to find other careers. There are still lots that are trading. And I think this will be another one of those lessons, is that if you find a good place where you are surrounded by smart people and people interested in your success, that's a place where you want to stay. I know that most of the traders that sort of hopped around from place to place trying to get, you know, an extra few percentages here or a little bit better on their round turns, most of them did not survive for the long term. But the people, when I think back, the people that stayed in one place or stayed in 2 places and were able to focus on their career, and they're surrounded by successful people, they have been able to have a larger degree of consistency and long-term success over their careers. I would say that a lot of my success is due to hiring trainees and having trainees around me that turn into successful traders, and our ability to work together on different trading related projects of innovation and research. And always working with a trainee reminds me of how hard that I need to work in order to stay relevant in this profession. All right, let's keep going now. Some more questions. Do I feel the role of AI will be the next big change to happen in the markets? Yeah, it's definitely, I don't know if there's actual, you know, AI out there that works. You know, the cars are really just algorithms, but you know, if somebody can figure it out, it's going to be an edge for sure. I've got, oh, I think I actually know this guy. Got a guy named Jody saying, "Give us some edge, Jason." Sorry, Jody. You know where to get that edge. Come on over, buddy. Are there plans to increase the buying power available as per the scaling plan? Oh, that's Adam Novak again on the TradingDock. You just reach out to the TradingDock guys on those ones. How in general do you observe an edge? Good question. Again, it's a simple answer, but a difficult thing to observe. You watch the markets at specific times during the day consistently. So if you're, you know, if you're in the US and you're up at 8 o'clock, always watch 8 o'clock to 10 o'clock every day, or 8 o'clock to 11 o'clock, and that's your block. Let's say that's your first block of consistent staring at the screens. I guarantee that it will take a while to see stuff, but after a while, you will start seeing things that other people just don't see. If you can have the discipline to focus and stare at the screens. I personally struggle to do more than a half an hour in a shot of extreme total focus. It's exhausting. And then I'll need a break, and then I come back and I do another half hour shot at a time. So how in general do you observe an edge? It's finding a repeatable trade or event in the market that you can rely on.
Hey, Jason.
Yeah.
I have a question. Can you go in a little bit about over curve fitting? I know a lot of people, when they do automated testing, they back test and they'll over curve fit it. But I think a lot of discretionary traders do the same thing when they do their research and they're looking at charts.
You mean making the research results fit the results of the market? So let me think about it. Let me take a moment to think about that. I mean, it's a classic research dilemma in any kind of research, never mind market observations and market research, is making sure that you aren't just cherry picking, making sure you're not cherry picking results that you want to see because you think there's a pattern there. The classic research process is you come up with a hypothesis, you take in a bunch of data, and you take in data you haven't messed with, clean data that has no bias, and you see if that hypothesis holds. And the most dangerous thing to do is if you have a hypothesis and you're fighting for that hypothesis. The job as a trader or as a researcher is not to fight for a hypothesis, but is actually to let the data do the talking. And a lot of people think they come up with a good idea and they fight for that idea, whereas you really need to be coming up with the idea and then letting the data tell you whether you're right or wrong. And a lot of, I think it's an ego problem a lot of times with people, is that they think that the idea is their idea, and if that idea fails, that they fail. Whereas really you need to look at it in terms of it's just data. The market doesn't care. Nobody else cares. You just need to let the data do the talking. And over the years, that is probably one of the number one things that I've seen for people that are looking for, that study data in order to put trades on, is that that warning that you get on every piece of investment advice everywhere in the world. Past trades or past success does not indicate future success. So I guess that'll be about my thoughts. Does that ring a bell? Does that make sense? Does that help?
No, yeah, that's good. Perfect. Thank you.
All right, let me check out some more questions here. Let me see if I miss anything on my notes. I'll talk a little bit about some of the old school traders that I've seen. There are some interesting stories. Probably the craziest one of my trainees to become successful was a Chicago guy, and this was before spoofing was a crime. And this guy was a Eurostocks trader, and he was trading bigger and bigger Eurostocks, and was manipulating or moving orders around to execute trades in the market, and effectively was spoofing. And this guy did that and he was moving the markets around with thousands, 2,000, 3,000 lots when the bid offer was, say 300, 400 lots, and making millions. It either, once it became a law to stop doing it, or the way that he traded and spoofed the market, people started calling him on it. As soon as he figured out that he was getting called on a lot of his spoofs, he just stopped and ended his career. Ended his career with a huge bank account, and then went on to do other stuff. So his edge lasted, let's say, for 3 or 4 years, and he made a ton of money off the edge, and he just called it a day once that edge ended and figured, I've made enough, I'm getting out of the game. Maybe like a mobster who got the last job done, made a bunch of money, and then just got out. Another spoofer who was a trainee of mine and was not successful, who actually couldn't cut losers when he was working for us in Chicago, and so we had to let him go. I mean, gave him a whole bunch of warnings. Look, you got to stop. You got to stop not cutting your losers. You got to cut your losers, otherwise there's no career. Anyways, he didn't, and we let him go. And then a week later, 2 weeks later, I heard that he made like $2,000 or $3,000 in a day at this other trading firm. I'm like, shit, are we idiots? Did I let this guy go? And did I not see something? And then a couple days later, another story, another rumor came back, or stories that this guy made another 3 or 4. He's made like 3 or 4 grand, like every day for a couple of weeks, and then another week later, this guy's making like 10 grand a day. And then finally, the last story I heard was that he was down 250 grand, was spoofing with 1,000 lots in the NASDAQ, and had been caught on, let's say, 1,000, 2,000, 3,000 lots in the NASDAQ. And it was a whole bunch of ticks offside, and the trading firm that he'd gone to struggling to get out of the position, and the guy lost. It was either 150 grand or 250 grand. No one to go to losers. I got the gilt trader, I got the 50 lot trader. All right, let's see some more of your questions here. One guy is asking, if you mean finding edge, do you mean arbitrage opportunities? No, I mean edge is an advantage at a specific time where you have an advantage over other people in the market, either through your own observation or through some technology or through a spreadsheet or through something you've observed in the market. And that edge usually only lasts for a certain amount of time, a certain amount of time during an individual day, and it also only lasts for a certain amount of time over the space of a long-term period. So, something that you observe in the market is not going to be available in the market. An edge that you find in the market is not going to be available for forever. So is edge arbitrage? Arbitrage is a type of edge. It's difficult, and in the electronic trading world, it's exceptionally difficult because any real arbitrage is instantly smashed out by fast-moving computer programs. Okay, how do you find your edge, and is there a clear boundary between finding an edge, seeking for alpha, and insider trading? So edge or alpha is the result of good edge, and a simple edge could be just simply wait around for a trend to establish itself in a market, and then for you to get in, and if it keeps going, you stay in, and you stay in for X number of ticks or until the trend ends. Or if it reverses a certain number, and that can be your edge, just to sit there and patiently wait for a trend. Sit, wait all day, wait all day, wait all day. Oh, there's my trend, I'm in. And you have to define how far how many periods do you wait of the trend going before you get in, and then for how many periods after the trend is ended, or looks like it could end, or has ended, do you get in? So what's the boundary between edge and insider trading? Well, insider trading is illegal, and edge is the thing that you want. Now, yes, insider information is a huge edge, but it's illegal edge. So one really in the futures market doesn't exist unless you're getting order flow from a broker or something who's telling you that his clients are coming to market. But again, that's illegal. So, but no, edge is not insider trading. We have a comment here, maybe not about a comment as opposed to a question. You are essentially describing knowing when a poker game becomes soft. It's exactly like gambling. Yeah, so the one edge in playing blackjack is your ability to count cards. I don't think they let you count cards anymore, so they throw you out if they find you counting them. But yeah, edge is knowing when the odds are in your favor. And there are plenty of times when I think the odds are in my favor, and I think my edge is kicking. Just today, I had a trade where I was like, boom, I see my trade, got in with 100 lot, and it quickly didn't go my way. I got lucky and I scratched it, but the opportunity disappeared immediately. So edge is like knowing when in poker you have the advantage, and that is what edge is knowing when you have the advantage, at what point during the day, and how long it's going to last. Or if it's just a moment, and that's your edge, and you're in, and you see where it goes. Same guy says the S&P is always going somewhere. It's true, but there's a time when it's always going somewhere, and then it's really going somewhere. All right. There's another comment. Is the commonality with certain discretionary traders to exploit inefficiencies with computers? Yes, I see computers screwing up, not every day, but frequently enough, or programs that are just badly programmed that I can take advantage of. Yeah, absolutely. Okay, I'm not sure I understand this question, but I'll go with it and interpret it how I think. How much time do traders give themselves generally at your firm to determine when a regime change has truly occurred versus temporary aberrations? So I'm going to take that as when does your edge change when you no longer think it holds. A lot of that comes from your and this will be another big lesson, and you can write this down. How do I stay relevant for the long term? You need to analyze your trades, and you need to analyze your trades religiously in a spreadsheet so that you can track the performance of individual strategies and opportunities. So say you trade the S&P at the open of the S&P, and say you trade the S&P over figures. You need to keep track of two sets of data. One, your performance of the open of the S&P, and the other one, your performance of the S&P, of you trading the S&P over figures. And you collect data for 1 week, 2 weeks, 3 weeks, 10 weeks, whatever number of months, and then you look at your data. Now, if you're in the collecting the data mode because you're not sure of your abilities to make money at those periods, you should probably be doing it on sim and collecting the data on sim to see where your success is coming from or where your losses are coming from. But you do that again through analysis. I lost my train of thought because I just saw that the guy who's asked this question has left. But so how long do you sit around and throw money at something? I don't sit around very long. You know, you can see the edge is working or it's not working, and if it stopped working, I'd say for me three days, if it's, or three specific opportunities, and then I'm sitting back and I'm being a little more hesitant. But again, it's going to be different for everybody. But the real secret is to use the analysis to tell you whether it's working or not. Does Positive Equity provide programming training for trainees? We do for some. Not everybody takes to it. Used to be core. Some people don't do it as much anymore, but it's definitely an advantage, and we encourage people to do it. Being able to program is a big advantage, but if you're being able to program doesn't guarantee that you're going to become a successful trader. But if you've got all the other attributes to become a successful trader, being able to program is going to help you do it that much better, in my opinion. Okay, I've got one guy says, this could be a silly question. Andrew, there are no silly questions. But what's the longest you hold a security? Do you close out all of your trades at the end of the day? So I would say most of my outright positions are closed at the end of the day, except for maybe some long-term calls on stocks, or I held British pound for a very long time after Brexit, mostly because it was underwater so much. But most of our positions are closed at the end of the day, or they're hedged with some other instrument, so that we don't have any, or so that I don't have any outright exposure to the markets overnight, because markets really do move overnight a lot. All right. Okay, here's an excellent question. Who's also left? Damn it. Why do successful traders who work in prop and who left to work independently fail? Is it primarily risk management deficiency? So some of the things I've already alluded to a little bit. One of them is when you're on your own, you don't have smart people around you, and having smart people around you is just a better scenario to be in. And not everybody fails when they go out on their own, but I'd say a good, too big a percentage to take the risk. You always want to be surrounded by other smart people. People on their own may not have risk management professionals watching them, and so they need to risk manage themselves, and most people can't do that. Not having the smart people around you, and then not having people that inspire you. I guess that could be part of the smart people around you. And for me, not having trainees. Having trainees around you just shows you all the things that you need to do, both in terms of risk management, in terms of innovation and working to stay relevant and working hard. You know, you could think you're the big shot when you're on your own, and you don't realize the level of work that you need to be doing. You could also have a huge day and think that you were, awesome, but in reality, you probably should have made 2, 3, 4 times that. And if you had people around you, you would see what a good day is compared to what you think a good day is. Okay. Do you normally use C++ for live execution and C#? Yes. VBA, yeah, VBA is just for Excel. We never really, we don't do trades through Excel. Can I make it as a remote trader? The odds are against you. It's always better to be working with a firm that helps you with the edge and provides the edge, and has got trading ideas that they will share with you when you work with them. But there's a there's a price to pay for that, and that you share profits. Is it possible to win market on the long run? Again, I've been doing this for 20 years. So you're only as good as your last trade, but knock on wood, I'll have as many more years as I wish to be in the profession. What would be the best way to applying directly to PE? Just go to the website. Positive Equity does offer internships in Croatia. I'm not gonna answer too many of these directly because they're all about positive. Okay, this is a good question. How do you suggest individual retail traders find community, and is that an essential to long-term success? Again, I think one of the real keys to cracking this and to being successful over the long term is being surrounded by other smart people. Doing this on your own is just difficult, and I will just let the numbers speak. That I've had a lot of friends and colleagues who've done this job over the years, and the majority of the people that have gone out and done it on their own, and that doesn't mean everybody, hasn't made it in the long term, has had to give up the job. There are a few people, and I've got a few friends that are doing this by themselves in private offices, but for the most part, the people that are trading with other people, that is an advantage, an exceptional advantage. For long-term trader success. But everybody always thinks when they're going out on their own that I won't be that guy, that I won't be that person. It's like the drug dealers scenario, where every person that becomes a drug dealer always thinks I'm going to make the money, I'm going to be the top guy, and I'm not going to get either arrested or shot. But lo and behold, most drug dealers either get arrested or shot. Very few. Very few, ride off into the sunset. And that's the same thing for trading. Very few people think that they will be the person that doesn't make it when they go out on their own. But the numbers speak for themselves. Most people, when they go out on their own, will be stepping onto a road of finite length, and it's not a matter of it's a matter of just how long it will take before their edge wears out and their ability wears out, and they have to call it quits. So trading on your own is exceptionally difficult. So what's the best thing for a retail trader in terms of community? If you can find somebody that's also trading successfully, I know that a lot of the guys in our office obviously work next to the people work with the people that are next to them at their desks, but also have headsets. So yeah, if you want to have a community and you don't want to work with a firm that has that, which I would recommend because there's such a big advantage, is get yourself a headset and be on the headset with somebody on the other end. But that's gonna, you can only have so many people on the headsets. All right, going down some more questions. Good questions, guys. There's loads. I hope I get to all of them. Do you vary the time frames for the instruments you trade? Absolutely. What markets do you trade for the most part? If you work with me, John, I will share that information with you, but they call it proprietary trading because the information is proprietary. But I will tell you that I trade equity futures and equity index futures and bond futures. No currency, very low currency, except for after Brexit. Oh, wait, no, that didn't go that well. All right. So do you vary the time frame for the instruments trade? Absolutely. Some things with low volatility, they just don't go very quickly or go anywhere. So you've got to have a longer time frame. And vice versa, there are certain times of the day when you hold trades for small amounts of time, and there are certain times when you need to just sit on your hands and run the winner. I think the The guy in Reminiscence of a Stock Operator said it best: I made most money when I was just sitting on my hands. Okay. Can you teach swing trading without sitting in front of the screen for hours, years, compared to the scalping interests in your thoughts? Okay, interested in your thoughts. So can you learn how to trade without spending hours in front of the screen? Again, you might be able to, but I don't know that way. And the way I was taught and the way I teach is complete immersion in the markets, and complete staring at the markets and learning the markets, and that whole Zen cliche of becoming one with the markets. Because the longer you spend looking at the screens, the more time you spend at the screens, the more edge you will find, the more opportunities you will find, and it's simple math, really. Who do you think is going to have a better chance at being successful over the long term? The person that spends 2 hours a day, or this person that spends 8 hours a day, or 10 hours a day, or 15 hours a day working in the markets? It all goes down to that quote, I can't remember which book it's in, but the whole concept of 10,000 hours to become a professional at something, to become really good at it. And one, let's say 10,000 hours is not the exact number, but it is a number of large time frame, where once you get to that 10,000 hours, you have seen a lot of other things and a lot of opportunities that somebody that's only seen, let's say, 1,000 hours is going to have learned, and the opportunities and the edge that you'll be able to find after looking at the markets for 10,000 hours, maybe it's 12,000, maybe it's 8,000, but you get the idea, is going to be a lot more apparent to you because of all that experience. So there are no shortcuts, is the real answer there. Okay.
All right, Jason, we're getting close to time, so let's say maybe more questions, and then
Yeah, we're almost to the bottom of the questions.
All right.
So some are market oriented, so I'm just going to pass over those. If I knew the answer to some of those market oriented questions, I'd be a bazillionaire, but I don't. So a lot of them are just opinions. Do you remember the biggest individual loss in PE, and which market was it? Let me think. I haven't had any really that stand out. I think we had a trader that printed down maybe 140, 150, and at the end of the day it was 70 or 80. But again, it was a big loss for the trader, but it was within let's say the neighborhood. It was still a big loss, but it was within the neighborhood of his performance. So it was definitely smaller than his best day, though. And again, I don't answer questions about the markets because that's the proprietary information. All right. Pretty good question here. How long would it take me to make money as a trainee? Our process is really it's a 1.5 to 2.5 years. Some people go a little faster, some people go a little slower. Well, not 2.5 really is at the long end of it. It's not as fast as it used to be. I started live when I started trading. We didn't have simulation, and you just went straight in. But again, the markets were easier back then, slower, and I think the fastest I ever saw, and again, that was in 2005, the guy was making money after 6 months, but I haven't seen that for many, many years. So generally the number we say is anywhere from 1.5 to 2.5 years. And again, when you start making money at 1.5 years, you're not making a lot, but it's really in the 3rd year where you start shifting up gears, and this job becomes really lucrative. It's like going to school. It's going to college. This job, we teach. It's a degree in trading basically. and there's a lot of reading, a lot of writing, and then there's tons of hours of simulation where you're heading towards that 10,000 hours. But the people that make it to those hours, you know, the traders that have been with us 4, 5, 6, 7 years, you know, it's a life-changing experience. But it takes a long time to get there. I think the quote I like to say most is, in this career, you can get rich, but you do not get rich quickly. Yeah. Okay. All right, there are a few more other questions there. If you guys don't want to send in a few more, I think that's to the bottom of them. See if I've got any other notes before I sign off. Yeah, no, that's it. I guess you know, you heard probably 6 or 7 of those big things to stay relevant in a career. One of them is treat yourself like a trainee and always be working hard. Be working hard on innovations and research, and don't let something that you discovered today be the thing that you hang your life on for the rest of your career on. You got to be finding new opportunities. Treat yourself as a career, as a trainee, new opportunities. Adjust and adopt new technologies, new markets, and new strategies. Surround yourself by other smart and successful people. Find a place where you have all those elements, and don't leave it to go out on your own. Again, there will be some people that make that, but the risk is just, in my mind, it just doesn't make sense to go out on your own. You should be able to find a place that you can be successful in the long term and be happy at there. And there's a value to being surrounded by other smart people. And then the obvious one is risk management. You know, I didn't really throw it in there, but being tight on the risk is just essential. All right, well, that's it. I can see it's 3 minutes to the half hour in whichever time zone you guys are in. It's 3 minutes to 11:30, so it's 11:27 for me at night. So I hope you guys enjoyed that. Feel free to reach out on either of the TradingDock websites or the Positive Equity websites if you've got more questions about what I talked to you guys this evening, or on Facebook and Twitter. You can find us on Twitter, Positive Equity, and you can find me on Positive Equity's Facebook site as well. And I'm happy to answer more questions or point you guys in the right way. And thank you to those last 2 questions, not questions, but saying thank you. You're welcome. Thanks for your time, guys. I really appreciate you listening.
Awesome. Thank you for the webinar, for the information, and as always, for spending some time with us.
Look forward to the next one.